All right. So welcome everybody. It is Wednesday. Thank you for tuning in to us live. And if you're listening to the podcast, we thank you for listening to the podcast. We're going to talk to you all about the 1,000-pound elephant in the room, and that is Coinbase. It IPO'd today, and it was so much hype around it. It was the second most anticipated IPO in like the last 2 years next to Facebook. And so we wanted to kind of see like what happened. Did it explode? Did it implode? We want to look at all facets and why it did what it did and why it didn't do what some people may have thought. Leon's going to tell you more about why we chose the topic, why I do what I do, and that is housekeeping.
Yeah, so Coinbase today, so this was the elephant in the room. This was like like I said before, the two of the biggest this year are Coinbase and Robinhood. And we got Coinbase out the way. And it turned like it was a lot. I mean, it was a huge amount of hype leading up to this IPO. Remember, it was a direct listing. So there's no lockup period. Anybody that wanted to sell could sell. That's why we didn't. That's typically with direct listing, typically you won't see these massive pops in the price because the market is overwhelmed with supply. So the market has to be able to absorb all that supply. So there's not that whole supply demand dynamic where it's a lot of dollars chasing a few shares. It's more like a lot of dollars chasing a lot of shares. So the pops are kind of may not as happen as frequently with direct listings. But today, Coinbase, it came out the gate like we're gonna go over the details of it in a minute, but it came out the gate strong. It kind of did its thing early and then just kind of fizzled. Right? A lot of people are like, well, what happened? So I have a theory on what happened and why it happened. And Brent, we get a minute, or if you got something you want to throw in there, but throw up a slide.
Yeah, well, also I want to say for those of y'all who are new to investing, the IPO is an initial public offering. It was the first time Coinbase made itself available to the public on a stock exchange. The reason why I said it that way is Coinbase was actually on an exchange before becoming a publicly traded company on an exchange. They were on what's called the Nasdaq's private market, which is something many people don't even know about. So with that being said, you understanding like what happens when a company IPOs is changing. It's changing by the second. Direct IPOs, SPACs, these things have existed before 2020, but they weren't just commonplace. Normally, if a company wanted to IPO, they would go find an underwriter like a JP Morgan, and they would basically promote them. They would make sure their financials are in order. They're going to underwrite a certain number of shares, but they also do what's very important to some stock IPOs. They would control the number of shares being listed to the public. When you control the number of shares being listed to the public, you can create an artificial supply-demand curve by limiting supply available, so demand is being driven higher. When it's a direct listing, the curve is skewed because it's directly being offered by the issuing company or the company that owns the stock. And that means that for investors, it's less likely to have this marketing-based excitement around it. So you need to consider that when you understand what's going on with this Coinbase IPO. In addition to that, for anybody who wants to take this conversation and kind of go deeper, peel out the layers and talk about what's really going on and just in the IPO space as it relates to SPACs, as it relates to private offerings, as it relates to traditional IPOs, you can find us on Clubhouse after this is over today. Probably in the next like 35 minutes or so, we'll be on Clubhouse. And for anybody who's listening to the podcast, normally on Wednesday night between 9:30 and 10 p.m., you can join us to continue the conversation from Facebook on Clubhouse. So with that being said, let me pull up the first slide, Lee. And did I miss anything, or that's about accurate?
Nah, you got it. You nailed it. And so we're gonna pull up here. So we're gonna just kind of dissect what happened today, because it was really interesting. I was actually shocked personally after what happened. It was not the way I expected this IPO to go at all. It was a direct listing. Now I knew there probably wouldn't be a huge pop in price, just because again, direct listing means there's a flood of shares, no shares are being held back, which means that there's no, as Brent said earlier, there's no kind of that quasi artificial pumping of the stock because they're holding shares back. So I didn't expect a huge pop, but I didn't expect this. So on the screen, we just have a card just showing kind of, we're just going to run through what happened today. So again, today was the IPO. And so a lot of people didn't know is the pre-IPO price was $250. And they announced that number either late last night or early this morning. And that's really just an arbitrary number. It doesn't really have any meaning in anything. It just means that, and this never happens, this typically never happens, but before stock goes public, is what's called the discovery phase, price discovery phase. And what that is, typically it's when in a regular IPO, when you have, like Brent said earlier, road shows and big banks behind it, what's happening, those banks have been allocated a number of shares.
Well,
so
Leon,
what's happening,
yeah, you ran through the term road shows, and I'm pretty sure most people aren't used to hearing road show with companies. So yeah, if you can give a breakdown of what a road show is.
Yeah, so roadshow. So pre-COVID and even pre-COVID, couple companies were doing in what they call typical IPOs. Is they would get, like Brent said earlier, a bank, a JP Morgan, a Goldman Sachs to underwrite it, and then basically what that means is that underwriting bank would essentially buy up all the shares, or take ownership of the shares, then sell them off to bigger banks, bigger hedge funds to then buy the shares, and that's how a company would raise money in an IPO. An IPO actually takes place the night before the company lists the shares. The shares are actually sold to these big companies the night before. They raise all this money, then the stock lists for us on the public markets the day after. So what a roadshow is? So a roadshow is when those big banks and the company literally go on the road and go to these big hedge funds and big banks and big pension funds and sell them on buying their stock. So that's what a roadshow is. It's just like a song and dance pony show that these companies do in front of these big companies to try to get them to buy their stock. Well, with direct listings, what Coinbase did, none of that happens. Everybody stays home, especially in the time of COVID. It actually works perfectly. And the shares are just directly listed on the exchange. There's nobody buying them beforehand. All of us can buy, and we can buy as many shares as we want if we can get allocation prior to the IPO. So you can actually go into your brokerage and put in, say you want to buy, X amount of shares at whatever your limit price is, and hope you get filled at a reasonable price.
All right, hold up again. So limit price.
Limit price, yes. Yeah.
So limit price, when you're doing an IPO, what happens is IPOs don't always just immediately open up the open of the market. They have a period where their bid and ask has to be narrow enough to kind of reach their true price, and then they release it to the general population.
That's called price discovery right before the IPO. Yeah. Mm-hmm.
And that normally can happen like 12 noon, 1 p.m. And what we found, and this is actually game for everybody just listening, new investors or people who are new to the stock market will hear a company's IPOing on a given day, like Wednesday, and they'll go to the open. Like as soon as the market opens, they're assuming that they'll be able to buy it, and they can't find the stock anywhere. And they start thinking like, where's the stock? How do I buy it? Why can't I buy it? Where is it at? And the thing is, the price discovery hasn't finished yet. And so it's not released to the public. And oftentimes that means the numbers go higher and higher during that period. But the limit price is a way that you buy stock. And so again, this is for like, share this now, pay attention. This is a moment for those of you all who have brokerage accounts, but you don't understand all of those options available to you when you buy a stock. You'll see market, you'll see limit, you'll see stop loss, you'll see tracking, and depends on the type of brokerage platform you use, be it E-Trade, Robinhood, TD Boardhouse, whatever you're using, it may be slightly different. But a limit order is normally associated to IPOs. If you place a trade for a stock inside of a brokerage account and it's for an IPO, it has to be done in most cases as a limit order. And the reason they did that is they're trying to make sure you understand what you're getting yourself into. Because during that discovery period, the price is changing so rapidly that if you just create what's called a market order, meaning it just buys it as soon as you place the order, you don't know where you'll end up buying it at. And then you hear, like, this is very important. Leon said that, this not even Leon, this is Coinbase. Coinbase stated that it was going to be $250. If you, as a retail investor, thought, oh, $250, I'm going to go to sleep, put in the order for, to buy 20 shares or 5 shares, 2 shares, because it's going to be $250. I know I have $500 in my account. But during that period of discovery, it hits 429 or 381 is what it comes out to. You weren't anticipating spending close to $800 when you made that, when you put in that order, or you thought maybe 500, but you weren't thinking 800. Limit order says, what is your limit? Like, how far are you willing to go? What point should we stop thinking about this? So it says, you know, if you can place an order, which will be a limit order, as Leon stated, and that just simply says, I read that it's 250. I know that discovery happens because I listened to IEA and they talk about discovery, which maybe you knew about before, maybe you didn't. But discovery is when that price changes, but oftentimes it's when the price is going up before it reaches the open market. And you say, you know what, it says 250, but those guys talk to me. I know how this game works. I'm not willing to spend more than 350. That's my limit. And so that means that as long as when this IPO makes it to the public, it's less than $350, your brokerage account will automatically buy it for you. But what that also means, you've reached your limit. I'm not going any further than 350. So when this opened at 381, your order will not be filled. You will not, the shares of Coinbase would not have been purchased for you because it exceeded your limit. So that's why it's a limit order, and that is what a limit order does for you.
Hey, real quick, your audio is fine, but there's like a clicking noise or something after you make a statement. I don't know if you can, something you can adjust. But yes, so everything Bert said about limit orders is definitely true. Limit order is just the amount of money you're most willing to spend. The stock will not be bought for you at more than your limit. So the pre-IPO price for Coinbase last night or this morning was set at 250. And I remember I said on IEA to somebody we were on there discussing inside the platform, I was saying, you know, it's most likely to go much higher than 250. That's just a kind of a placeholder. And it did, right? So the price discovery was going on for about, they came out a little after 1 p.m. It actually listed. So it was going on for like 4 or 5 hours of price discovery period. So it opened at $381, right? So it's a gain of 52% above the pre-IPO price. So
Leon, I got to say this. For anybody who's in the IEA Facebook group, which if you aren't and you're watching this, you should go to Facebook, type in Investing Education Academy, and join our Facebook group. We predicted that the open price would be $375. So we were within $6 of what it actually opened at. So that's pretty cool.
Yeah, you're right. Yeah, I just realized it. Yeah, so it opened at roughly the price that we had kind of guessed at 381. So that's a 52% gain above the pre-IPO price. So anybody who got it at around 250-ish, you know, got a sweet return at the open. Now the high for the day was 429. So it came in at 381, shot up to 429. So everyone that came in at the IPO price of 250 or got in at the opening price 381, everyone was looking good, right? But then during the day, second half of the day, well, it was all in the second half of the day, towards the close, it tanked. It went to 429, crashed, came back crashing down, crashed to the open price, was 381, what it listed at, and closed at 328. So whomever got it around that open price of 381, right now is sitting on a 14% loss on their money. Of course, the people that got it around 250 are still looking at a gain. But I'd probably say most people, at least retail investors like us, got it around that 381 or higher price. So most people I would say that are watching this or listening to this that got in probably are sitting up looking at a loss right now. 14% loss. That's significant. And as Brent said earlier, so the market cap right now is $61 billion. $61 billion. So kind of put that in context two ways. One is that Facebook is the number one IPO ever, I believe, at 104 billion. And Uber was slightly lower, I think, at like 58 billion. So and the Uber one, it kind of depends if you take the pre-IPO or the post-IPO. But so either Coinbase is number 2 or Uber is number 2. But Facebook is definitely number 1 IPO ever. So this was a huge IPO. So that's one. 2, remember, Coinbase is an exchange, right? You know, this is where cryptocurrencies are traded. So to do a comparison, Coinbase is 61 billion. The NASDAQ market, which again is a public company that we can all buy, Their market cap is only 25 billion. Okay, and Nasdaq has been around for 30 years. And just another point of comparison, I looked it up. So last year, 2020, Nasdaq average revenue per quarter was $1.4 billion. Coinbase just reported right before the IPO last week that the first quarter of this year, their revenue was $1.8 billion. So basically, their profit was $1.8 billion. The profit was $1.8 billion. So essentially, Coinbase and Nasdaq have roughly the same-ish range of revenue profits, but yet Coinbase is trading at 2.5 times the value of Nasdaq, which has been around forever, and we all know it's stable and ain't going anywhere. So what does that mean? To me, that means that Coinbase is crazy overvalued by at least 2.5 times. I think it should probably actually be worth less than 25 billion because there are a lot of risk involved with Coinbase. It's new. We don't know what the market holds. Whereas the Nasdaq, been around forever. Coinbase actually listed on the Nasdaq, I believe. So they're actually on the same exchange. It's an exchange on an exchange, and they're going to be paying fees to the Nasdaq. So the Nasdaq's another revenue source for the Nasdaq. But the fact that Coinbase, that just came out, young company, only been around for 10 years, is trading at 2.5 times this legacy, steady revenue generator. The Nasdaq, to me, says Coinbase is overpriced. Now, earlier we said, we showed how the stock dropped, like went up to 429 and actually absolutely tanked down to 328. I think a lot what happened was a lot of people, and I didn't realize either till today, 96% of Coinbase's revenue is from trading commissions. 96%. Now, we all know what Robinhood did to stock commissions. They went to zero because Robinhood came along, disrupted the industry, and got rid of a huge portion of the stock brokers' revenue. So now you have Coinbase. Technically, 100% of the revenue is from commissions. Let's say what it is. All their revenue comes from trading commissions. So I think a lot of people, once they became aware that this company has huge risk, huge competitive risk, that say a Robinhood, because another thing about Robinhood broke down commissions and stocks. Robinhood has said recently that they're really starting to beef up. Well, they're in the process of beefing up their crypto side to add more coins. And right now, to add more coins and actually be able to move your coins off of Robinhood onto another platform. So Robinhood is going to be moving hard into the crypto space. And right now, Robinhood already charges zero price commissions for crypto. So all that being said, I think what happened is the market looked at it and said, okay, this company is way overvalued at 61 billion. At one point, it reached over 90 billion when it was up around 429. And all of its revenue, effectively 100% of its revenue comes from commissions that we all know are going away over time, or at least they'll have huge margin compression because other competitors will either take their trading to zero or lower the price of their cryptocurrency commission. So after looking at all this, last week I was hyped about Coinbase. Today I'm like, I'm kind of like I'm not as big of a fan of Coinbase. But don't get me wrong, Brent and I love the crypto space, the crypto market. That's why we're starting the crypto bulls. But Coinbase in particular, just for me, it's trading 2.5 times the Nasdaq, and 96% of its revenue comes from commissions, which again, we know are going away over the course of a couple of years, or at least reduced. So that's what happens today with Coinbase. It was really interesting to watch, and I'm not as big of a fan of Coinbase as I was a week ago.
Yeah, and for anybody who's in the Facebook group, again, there's a lot of good conversations in there. This morning when people were asking us about it, I personally was like, I'm waiting because I thought it was overpriced from the beginning. And for me, I have a different spin. I agree with Leon, but I also, in addition to that, I think another thing happened with Coinbase. Direct listings, and this goes back to what we talk. If you follow us, we talk a lot about direct listings and what they are and what they mean for the company. Oftentimes, companies that do direct listings, their goal is to really reward their employees and early investors. It's not always really they're going for this big pop of the open market. And they do that because that means that they don't have to pay their employees as much and they don't have to use their own money for bonuses. Why is that important to this conversation? Because if you are aware, before the IPO drop, Coinbase gave each of its employees a gift of 100 shares of the stock. What that means is effectively is everybody received what would have been equivalent to $25,000 to this morning who works for Coinbase. But what that means in the open market as a direct listing, there's no lockup period. And because there's no lockup period, normally, again, when the company does traditional IPO, employees can't trade that stock for a certain period of months. In some cases, it could be up to a year or more. When you do a direct listing, employees can do what? They can immediately sell their shares. So what I see happening is somebody just gave me $25,000 this morning, and by midday or towards the middle, before I got off work, that 25,000 gift turned to 42,000. I'm thinking, and that's in addition to the shares they already had.
Right.
All of a sudden, I'm about to get off work, and I just got a $42,000 bonus today. Yeah, I'm gonna take some of that home with me. And I think some employees saw it as a gift anyway, and they start selling their shares, in which case the larger market, anytime they see people follow trends and people follow what's happening, what's called insider trading. If the larger community of still retail investors, because there's far more to it than that. But again, it's still certain people look at different metrics, whether right or wrong, they do look at them. And insider trading, from experience, I know is one that a lot of people look at and set alerts for. So if insider trading started happening in large scale and people were like, why are so many insiders selling? And they just thought, oh, well, then they go do a little bit of research and then they start to notice all the things Leon talked about, right? But it started from hey, well, why are they selling? And now they see these shares being dumped. They decide, oh, well, we're out too. So we're going to dump too. And it just becomes a follow the leader situation. So I'm still not super bullish on Coinbase. I like Coinbase. And I think, to own it makes sense for the long run. But for me in cryptocurrency space, there are other things you could be doing with your money. I still like them, but if you own Coinbase, I'm not mad or anything, but it's just, I probably won't buy it anytime soon. If you want to know just what's going on with me, it's a lot of competition coming out there. I might double down on PayPal or double down on Robinhood before I really dove full in on Coinbase.
Yeah, that's a good point. Competition is going to be huge. I mean, that's another thing a lot of people were talking about today on a lot of the news networks or the financial shows were saying how, and they kept going back to the point I have at the bottom, which is 96% of their revenue is from commissions. Right now, they're kind of not the only game in town, but they're by far the largest crypto exchange in the United States. As like Brent said, Squares, PayPal's start to add more coins and more options to trade, their commissions are going to have to come down. It just will. I mean, they're not going to be able to compete. Either zero commissions that some brokers like Robinhood are charging, or reduced commissions like what I think Square and PayPal charge. They're going to have to lower their fees, which of course is going to crush their revenue. And just real quick, I checked my math. So Nasdaq, as I said, Nasdaq last year had an average revenue per quarter of 1.4 billion, and Coinbase reported for the first quarter of this year 1.8 billion. So, like I said, effectively their revenues are the same, but yet Coinbase is trading at 2.5 times the market cap or the value of the Nasdaq, which to me again says it's overvalued. So yeah, I would maybe look at this around, if it got anywhere around that the pre-IPO price of 250-ish, between 250 and 300 is when I become interested. But yeah, for right now, yeah, I'm gonna sit this one out.
And we gotta so with that being said, we have to give a complete 1,000% shout out to Miss Belinda Jackson. She is a visual clarity expert, and we told you all we would show you what the end result of our last podcast was. So this is the visual representation of what we talked about during our last podcast. Check it out. And for everybody who is, sorry about that. For everybody who's listening to us via the podcast, and you're like, we can't see it. You can go to either our Facebook page or you can find us on social media. We will have this posted. This is a visual representation of our last meeting where we talked about Coinbase's revenue, the 1.8 billion. Q1, it was up 136%. and that was from 2019 to 2020. The market cap was coming in at 68 billion, and 322 million in profits are part of Coinbase's metrics. Leon's pick last week was Jamia, ticker symbol JMIA. My stock pick was Riot, which is ticker, but it's not Riot, it's the full name, but ticker symbol is Riot. RIOT, that was my stock pick. And you can see here our stock picks. And of course, there's Leon. Here am I. This is and we were talking about cryptocurrency and why you should be exploring how it's exploding. And this is cryptocurrency blowing up. So I thought that was like crazy cool. And we told everybody that Coinbase was going to be a direct listing. As you can see, Coinbase direct listing. And she actually captured what a direct listing was. Cuts costs, there's more profit in it. Employees can liquidate shares ASAP. We just talked about this. Like this is like, it was right there. We all of it was captured. What are the threats to Coinbase? It's the SEC can be one, and then how will they treat them, from a regulatory standpoint? And then also, will they be considered, cryptocurrency as a whole is looked at kind of with some skepticism from the government, but that's a whole another thing. What will it hit in the first 2 weeks? Will it be 2 billion in the first 2 weeks? It was a question. And it's one of the most anticipated IPOs in the US. And it launched in 2012, and it's a pure play crypto. So this is
the crazy thing about this, she did all this in the 20 minutes we spoke. We the 25 minutes we actually did the live last week. She produced all this, which was crucial.
Yeah. So if you are looking for somebody to do a visual recreation or kind of image of what it is you're talking about, I think this is super cool. And it captures so much information. I'm shocked. And like Leon said, she did this literally while we were talking. And so it's real time. And the company is called Picture It Possible. It's right here in the little in the corner. Picture It Possible. We want to, Ms. Belinda Jackson, want to say thank you for any business owners out there or podcasters who are like, you know what, I really would love to get something like this done for one of my podcasts. You can absolutely look up pictureitpossible.co and get in contact with Ms. Belinda Jackson. Definitely. So with that being said, we owe you our stock picks. All right. So for me, I'm picking QuantumScape. QuantumScape Corp, the ticker symbol is, where's the ticker symbol? QS. And I was also used to it being right here. I just realized it's Google, but it's not.
You're not on Yahoo.
Yeah, it's like, this is what happens. We have to move fast. so QuantumScape is an American company that does research about solid state lithium metal batteries for electric cars. The cool thing about QuantumScape that I like is the fact that right now we're all looking at what's going to happen with these batteries when it's time to either recycle them or it's time to recharge them or, whatever, deconstruct them. And QuantumScape is one of those companies that's actually doing research about solid state lithium metal batteries to see how they can be not only reused or reinvigorated, but they're also looking at the stocks to say, how can we improve them? How can we make them better? And similar like tennis shoes, I don't necessarily want to know like just Nike. I want to know who makes the rubber for Nike, because they're probably also making the rubber for Under Armour, and they're making the rubber for Adidas. And so this is one of those companies where it's dealing with lithium metal batteries for the EVs out there, but they can work with anybody. So they're not beholden to one. And, as it says here, Bill Gates and Volkswagen are investors of the company, which, if you don't know, Volkswagen is a huge company. I think Volkswagen owns Lamborghini. I know Volkswagen owns Audi, for a shocker anybody who didn't know that. So Volkswagen owns a lot of brands. They're a huge company. Leon, you got anything?
Nah, I mean, EVs, the next big thing in anything automotive. So yeah, I mean, I own Lee, Xpeng, and Tesla, but I don't own any batteries. So this is what I need to look up.
Yep. And the market cap is $15 billion. So that's putting them in the higher end of a small cap. So low end of a mid cap. But that for most people is going to be irrelevant. But market cap is shares outstanding times price per share. And I think they have a huge future because, as everyone knows, governments and countries across the world are now moving towards EV platform. Actually, one of our members, Bakari Haynes, called us and he told us that I want to say Montgomery County was one of the first counties in Maryland to go purely electric or sign a contract to have all their buses created to EV buses over the next some number of years. So it's happening. It's happening right now. And Leon, just total side note, that clicking that you heard, it actually was me. I just need to drink some water.
Well, no, I still hear. It's still, it's still
right
kind
now?
of. So every time you talk, like after at the end of each sentence, like this, it's almost like it's like a follow-on echo, but it's something after you when you complete a sentence.
Okay, I thought it was me. I was like, I need some water.
So,
what's yours?
All right. So mine is a company called AppFolio. Ticker symbol is APPF. Today they closed at $144 and I think 20 some odd cents or 81 cents. So what they are, they're not, it's not sexy like QuantumScape and EV batteries. They're a cloud-based property management software and data analytics firm to the real estate industry. So essentially they help apartment buildings, they help any company that deals in real estate to automate a lot of those processes of filing paperwork, paying rents, dealing with banks. They help facilitate. They help land or building owners to kind of just basically become digital, right? Everything in the real estate game, I believe is. I mean, COVID sped it up, but a lot of that was paper based, fax based, and something like AppFolio is moving a lot of that into the digital realm. And their numbers are actually pretty surprising. So last 3 years, they've been growing their revenue at an average rate per year of 29%, but their profits have been growing at an average rate of 172% over the last 3 years. So, I mean, growing profits exponentially almost year over year the last 3 years. Last year, the company returned, the stock appreciated 61%, and that's against the general market that appreciated 16%. So it greatly outperformed the S&P 500 or the general market. So again, AppFolio, they are a cloud-based property management firm, software firm, and revenues growing at 29%, profits growing at 172% on average the last 3 years.
No, I for those that don't know, my part of my past life was in facilities and property management, and the margins in this are ridiculous. And if you can automate some of this workload, that actually means that your bottom line revenue or top line revenue is going up as a result of being able to make these processes more efficient. So I will look into this as well.
And there's another thing on property management. Brent and I have a friend of ours, Alex. He actually started a property management, basically essentially the same thing as this company, a technology firm that was helping property management firms and real estate companies automate their processes. And he sold that company last year for $20 million. It was a startup he had for about 3 years, and then sold it for $20 million. So that just shows the demand that these real estate firms have for bringing in automation to their companies. Because like I said, real estate is really kind of an old line, static, deals with a lot of paperwork and a lot of faxing, even still.
Yeah, and also too, like the way these cities are going, many of these cities are looking at smart buildings, and this is going to fit firmly into the need to have smart buildings because the tech is everything. Like it's all running on software platforms, but many of the property and facilities management companies are old school companies. So they haven't caught up. So they still have a huge curve, which means there's a lot of opportunity because they also have very deep pockets and they can afford new services. So I definitely like this.
Cool. And just real quick, remember, quote unquote, growth companies grow their revenues grow their profits on average 20% per year. This one is growing its revenues, its profits on average 172% per year. So again, it just shows the demand for this company's products and how profitable this business is.
Yep. So for everybody who is with us right now, the stock pick for Leon is Appfolio Inc. Ticker symbol is APPF. And the company currently is trading at $144 roughly. My pick today is QuantumScape Corp. The ticker symbol is QS, and they are trading at roughly $40 per share. And for anybody who's looking to learn more about finance, about the stock market, about cryptocurrency, about real estate, we have something really cool coming to you all in the real estate space, which I think we're growing. Let's put it that way. We're growing. We have a new person to introduce to you all probably next week or very soon. Her energy is amazing. You're going to enjoy this. And for anybody who's interested in IAA Crypto Bulls, we are closer and soon to having everything in place to start launching our meetings. We already have people sending in their hand raises to join the platform. So we believe what we're going to do is for the first group, it's going to be the first 20 people who want to be involved in this mastermind, and they commit. That's it. They'll be the first 20. The next 20 after that, the next cohort after that is either going to be at 300 per month, or it's going to be 400 per month. We're still trying to make the final determination. But when we get to 20, when 20 people say, you know what, I'm in, and they commit, that's it. The next group is going to be a different price. So if you're interested in learning about crypto, and this marketplace is something you don't want to miss, honestly. And that's why we created a platform that isn't exclusively an IEA platform. Now, if you are in IEA and you're like, you know what, I want to get in crypto, but I need the basics, we have an IEA crypto group. Leon, you want to tell them about it?
Yeah, so inside IEA, inside the platform, we have IEA Crypto, which is our topic, which is open for the whole community. And then we have IEA Crypto Pro, which is a private group that's open to insiders and Panthers. So the IEA Crypto topic that's open to everybody, there we'll have kind of more general information, stuff about what's going on in the crypto space. It won't be as detailed, whereas in IEA Crypto Pro, we're actually going to be putting research that Brent and I are going to do, and maybe some other people from Crypto Bulls, surrounding different coins, different projects these coins are working on, and what have you. So again, yeah, the IEA Crypto Pro group is for insiders and Panthers, and the IEA Crypto topic is going to be open for everybody. And then of course, IEA Crypto Bulls is going to be a whole separate platform. And that platform, again, mastermind format, really fast moving. It's not going to be a hand holding thing. It's going to be like, hey, everyone brings their expertise to the table. We talk about various different issues, then we go off and take action. So the Bull is going to be fast paced, but I mean, hey, I said this on, I don't know if it was here or last week or what it was, but no, I think it was on our meeting with the Panthers. The crypto coin XRP was up 40% on Saturday alone. 40%. The stock market moves 10% per year on average. XRP returns what the stock market does typically in 4 years in 1 day. And XRP is a cryptocurrency. So it's things like that we're going to really be delving deep into in IEA Crypto Bulls. So and like I said, some of that will bleed into IEA Crypto Pro as well. So
yeah, and there was another crypto that was up about 102% in the last 3 months. And so it's for you, for people who think Bitcoin is the only show in town, you are not correct. And
Bitcoin is like, it's kind of like it's like the old slow grandfather now. Like we're looking at the grandkids. We want the high energy where the energy is. Most of my crypto is in Bitcoin, but I have a significant portion of my crypto money in what they call altcoins, which are smaller coins, like something like an XRP. Yeah, so all the real action is in the altcoins now, where Bitcoin and Ethereum are just kind of your steady eddies. They just kind of keep moving higher, but they're not doing 40% a day like XRP did. So
yeah, and actually one of the primary coins that I have did 14% yesterday. So for those of you all who really want to get into this crypto space and not being a gimmick, there's so many of these platforms. You get those emails or texts from people that are like, I do Forex and I do crypto, join, you pay us, and then you join this tier and this, then you get, we're not doing it. Like we're going to be on a call. It's going to be a platform that we're providing. Is what we do, but we're also not coming saying we're going to be the expert in everything. Like Leon said, it's going to be mastermind style, but we chose the name IEA because it's going to be a derivative of Investing Education Academy, crypto because we're going to be focused on cryptocurrency, and a bull because we're actually going to be charging ahead and we're very bullish on the cryptocurrency marketplace. So there's a very specific reason why we chose the name and why we're creating a new platform, because it's going to be somewhat of a new experience for those who have been with us for a while. All those things being said, I look forward to watching it grow. We're already at 12 or 13 people, so it's only 7 more slots left. So if you want to do it, you need to let us know quick. And with that being said, if you want to join the conversation, or if you also want to join IEA, because we still have Investing Education Academy, and you can, there's so much information about just stocks. Some people are like, I need to still figure out this stock market. It's here. And what we have coming about real estate is we're growing. That's all I can say. We're growing. I'm glad you all are with us because you're going to see the growth this year. And I think next year is going to be ridiculous. So see you over on Clubhouse. For those of you all who want to join us inside the Facebook community, you can just search Investing Education Academy on Facebook. Please join the group. We're at 414 members. So it's insane. It's just been a year. So we're super excited about that. And it's more to come. It's just more and more and more to come. And when we're post-COVID, like really post-COVID, and we can get out and host events, we're going to have some really cool events going on. So we look forward to meeting our members and growing this whole thing, and more importantly, growing our money. So everybody, thank you for being with us. And Leon, anything before we go?
Nah, that was succinct. We got it all in there.
All right, cool. Everybody, we'll see you on Clubhouse in maybe 5 minutes.